All right, folks, welcome. Hey, it's Friday. Got a little Luke Combs going on. Uh, got a bunch of good trades. Some bad trades. Have bad trades every day, folks. What do you do when you have a bad trade? You cut it. Pete and I always say that, sorry, Luke, got to quiet you down a bit. Um, we always say that when you have a bad trade, it's not like your family. It's not like, oh, you're married to this one or this one's your son or daughter. You have a bad trade, you move on. You don't dwell on it. You move it on, move it on. All right. So, with that said, let's launch up 3 at 3 because this is one of our favorites and it's the end of the week. Shoot, it's the end of the week. Sometimes I can't wait for the end of the week. Some weeks are just so good, you just hope they keep going. And this is one of those weeks. I mean, crude oil in negative territory. Are you kidding me? You heard Mark Fisher talk about it with me on CNBC halftime yesterday. It was a gift. Now, it disrupted a lot of things, yes, but I mean, do you know how many total contracts, by the way, traded in negative territory? Take a wild guess. So these were the May contracts. This, according to Mark Fisher, who would know, 4,500, give or take, traded in negative territory. Had 100,000 open interest. Traded 1,000,000 contracts in the June contract that day and 2 million the next day. And yet 4,500 contracts took it into negative. You know why that is? There was no storage. We'll talk about that. You know, I might dial Fish in for a call this weekend, and if I do, I'll post it up on here so you guys can all see it because, hey, that's what we do. Share information. And virtually all of these folks are free, so you guys don't have to worry. Here's a mobile fill. How about that? That's what I'm talking about. Bang. All right, let's get to it, folks, shall we? Now, I have on the halftime report, I told you guys a little bit about the unusual activity that we saw in Zoom. First of all, by the way, anything I'm going to tell you now, tell your friends about it. Tell your friends to come on here and check out Unusual Option Activity, or UOA, because this is where you get stuff you can actually still trade. Because we got what? An hour left of trading? That's why 3 is so important. Anyway, but also tell your friends, Jon's not your financial advisor. Jon is an educator, and Jon is offering information. If you choose to act upon it, that's you doing it of your own volition. All right, so let's take a look at Zoom. Why? Because yesterday we had strong activity in Zoom. Because the day before, the CEO told us that they had 300 million people a day using Zoom. That was on the 22nd of April, he said that. And guess what? Beginning of the month, it was more like a little over 200. And that was 20x what it had been doing in 2019. So these are astronomical numbers, folks. Now, does that mean that I'm going to load up on this stock and just say, wow, you know, this is the next thing that people can't do without? No, I think they're doing a great job. They've done a great job. I use them all the time. I must use Zoom for our team and for other meetings probably 3-4 times a day. Also do it with my friends for cocktail parties and things like that, a virtual cocktail party, which I will be doing again tonight with our clients at Market Rebellion. And I'll be doing it Saturday when I join friends for an Open That Bottle night where we each, usually we're in, the same room sitting around with each other. This year we're not. But we all talk about a fabulous wine that we've had. Doesn't have to be expensive, but just a fabulous wine and a story behind it. And, we just have a great time. Open That Bottle, we call it. Well, that will be virtual tomorrow for me and my friends. But anyway, we use Zoom, bottom line. So Zoom, there was the bullish call activity yesterday. Stock was under 158. You see it there. That was during the halftime report yesterday. Okay? Now, they were buying the 170 calls that expire a little over a week from yesterday. Exactly a week from today. They were buying those. They wanted to buy 6,000 of them for $4. That's $400, 6,000 times. What is that? $2.4 million. See how I did that? 400 times 6,000, $2.4 million, folks. So that's a big trade. I pay attention to big trades. You should too. Here's what it did. Those calls that were being bought yesterday for $4.20 on up to $8.40, I'm in for average price $6. Went to, take a look at it, $18.20. Now, many of you know when I talk about moves like this, I detail for you that what I do when I have a profit like this, I take money off the table. When I have a double, I take money off the table. This one, it opened up so fast, I couldn't just take a double because as you can see, look at that screen, they opened at $15. I'm in at 6, which means, of course, 12 would be a double. I didn't even have a chance to double there. I started selling these things at 16 and luckily got a lot off between 16 and 17. Didn't get 18, didn't sell 18.20. For all of you out there going, oh, Doc, did you sell? I suppose you sold the high, huh? You know, no. And to you haters, just keep following me because if you know everything I do, you don't really hate me, do you? You love me. But anyway, folks, enough bragging. I took money off the table because that's my discipline. If this was a loser and I'd paid $6, which I did, and it fell to $3, if I lost half the money on the trade, I would have been out. Now, you have to decide what your levels of taking profits off the table are and what your levels are of cutting your losses. For me, this is what I've done. I've been a trader for 38 years, so I think I've sort of figured it out, but I don't know where stocks are going to go from moment to moment. I only know where the odds favor, and that's what I do. So now, let's get into some fresh meat, shall we? Las Vegas Sands, I already owned it. Today, I added to it. Why? Take a look on the screen. Because at 2:46 Eastern Time, so about 15 minutes before this broadcast started, somebody stepped in and bought 14,000 calls. Now, for somebody, whoever out there is new to this, let me say that if you're new to this, 14,000 calls, there we are, 14,000 calls, times, what did they pay? Average price, $2. $2, but every option's for 100 shares, right? So it's $200. That's a $2.8 million trade. So when somebody makes $2.8 million trade, guys like me pay attention. Smart people like some of you should pay attention as well. Now, you decide how you want to trade it because, again, I'm not your financial advisor. But somebody buys an awful lot of calls that are, what? $6 out of the money because stock's trading 44. So that means the 50 strike is $6 out of the money. Somebody wants a lot of these calls. I want a lot of these calls. I was already long. I added to it. You can check my disclosure on CNBC. That's where it is, folks. It had come down from 46 down to 44 and is starting to make a move back up a little, but it's down 3% today. So that's why I added to it because somebody stepped in and bought a whole bunch of these calls again. Now, as you can see, the stock was 46 back on April 20th, sold all the way off to about 41-ish, maybe 40 and a half, and has been making this move to the upside. I like my odds here, and so I put on a trade. I bought these calls, and as hopefully it rallies, I will sell calls above it because that's what I do. Second of our 3 at 3, take a look at this one, STM Micro. They bought almost 3,500 of these November 25 calls. They bought them at 1:54 p.m. Eastern Time. They paid about $4 for them. So let's say that's $1.2 million. $400 times 3,000, you know, give or take $1.2 million. I bought these with them. I will sell and have been selling calls against them. Where is the stock now? Let's see. Now it's 24.89. As you can see, it was 24.86. So we're talking right around the same range. And look at that. From April 22nd, when this was a basically $21.50 stock, it has moved up nicely. I think it keeps moving. Again, which ones are they buying? November. I got a lot of time. I didn't buy these. I bought shorter dated calls in this example. Third for our 3 at 3, this one's a put. So it's a put, folks. What is a put? A put is the right to sell something. So this particular is an ETF based on bonds. And somebody's buying these puts. Let me see what I got here. Hold on. This is Invesco Senior Loan ETF. Looks like I have the June 20 puts as well. They were trading for 90 cents. That's $90. 36,000. So almost 40,000 times 90 cents. So what would that be? That's $3.5 million, give or take, something like that. That's why you pay attention to it, folks, because $3.5 million trade like that. So I bought puts at the June 20 put strike. I'm selling puts against it. This one occurred at about 11:48, let's say 15 minutes before the halftime report. There we are, 2072, so it's already right at the same level that it was when I got into the trade. Okay? So, that said, I hope you have a great weekend, folks, wherever you are. I'm going to try to dial up my friend Mark Fisher, get him on the horn, see if I can get him signed up for a discussion about negative priced futures and some of the other crazy things he's seen in the futures markets. But remember, we'll be back here Monday. It's all about being disciplined, taking profits when you're right, cutting your losses when you're wrong. Have a great weekend, everybody. It's always a pleasure to be here with you. Even the haters love when you guys follow me, the haters, because, man, there's nothing that feels better than making the haters wrong. Ha ha. Have a good one, guys.